This is the Iron Trader. It is Monday morning, so it's time to go to work. So as usual, we are going to review crude oil here and natural gas. This video is for information purposes only, not a recommendation to buy, sell any stock, buy the ETF. Please like and subscribe. Thanks for watching. Okay, crude oil daily, weekly chart. Now, the contract roll was yesterday for the crude oil, and for natural gas, it'll be next Sunday. So just keep that in mind. Now, we have a normal week here. For crude oil, your API report will be on Tuesday at 4:30. The EIA report will be on Wednesday at 10:30. And then for natural gas, it'll be on Thursday at 10:30. And then your rig count will be Friday. So at 1 o'clock. So basically what you have to do is you have to kind of stay sharp here and see what's going on here with the Red Sea. Make sure you keep in touch with that and make sure it's whatever's going on with that Straits of Hormuz, because you never know. You get some kind of a catalyst, it could rip crude up very, very sharply. Now, also what you want to look at here is the seasonality. Now, you're still in the shoulder season, so realistically, you're looking at sideways action here for January and all the way till mid-February, till maybe end of February, and then it should be a long trade. So let's take a look here at the old charts. Okay, daily chart. What do we got here? Now, you can see here where Friday you put in a kind of a topping tail, and then today we put in a lower low, but we have a tail going on the bottom. So basically what you have is just a sideways action. The key is going to be here is your 21 day, which you're locked together. You got 72.82 and you have 72.79. Very, very key support level. And then your 8 SMA at 72.71. That's all going to be in here for on a weekly basis. Again, if that is lost on a weekly basis, then we come over to the 200-day. You're looking at 71.57. But as long as it holds, you're going to have this chop up and down. But what I do like about this is, see, you have a low here for the week, and then we have a higher low for the week, a higher low. Now we've got to see if this candle will come in, make a higher low. But you also have is these lower highs. Okay, so basically what you got going on here is a wedge pattern. So it's going to smash one way or the other, either up or it's going to smash down and go down. So let's look at the upside. So what we want to look at here first is this 50-day, 73.67. Now you can see where the price goes right out into it and down. It's price into it, down. Now this went upper, but look where it closed, below that 50-day. This is very, very crucial. That's why you always want to use these. They're just simple moving averages. Okay, just keep it simple. 8-day here, you have your 21-day, you have a 50-day, a 100-day, and a 200-day. And then we just use candlesticks, and then these blue lines here, these are price channels, which basically gives you, like, say, the top of that candle, 76.18. So you know where the target is. That is basically your recent high. And the same way on the bottom here. See, this candle is 69.28. That is your recent low. Now, yeah, you have lows there, you have higher, but that would be your recent numbers where this comes across. Now, you can see your price channels are flattening out. This is flattening out, which is creating a really nice trading range. And then when she breaks, once you close above those price channels, well, then we know where we're going to go. You close below, well, then we know where we're going to go. Okay, so that's what you have to look at. It just makes, when you look at the charts, very, very easy. You say, oh, yeah, I know what he's talking about. Look at there. There's the price channel right there. That's the top of that candle. So I'll say, I have to go back and see, oh, what is the top of that candle? I don't have to. It's right here, right in front of you. So all you have to do is just look up. Okay, so let's just look at the upside. We're looking at is 73.67. Very, very key. And then we'll come to this candle at 74.19, and then to this candle at 74.63. If we can get above that, then this is the candle which we'd be looking for your resistant level. That'd be 75.25, and then right above it is 76.18. Now, again, if you can get above that 76.18, then what we come to the left of the chart here is 76.76. That's the next candle. And then we have that 50-day at 77.34 and then 77.74, which is your 200-day. But you have a lot of resistance, okay? So you have your 50-day, you have your price channel, you have another 50-day, and then you have your 200 SMA. Now, the downside, this is the key level here, your 72.82, your 72.80. That is very, very, very key support level on a closing basis. And then you have your 72.72 for the week on a closing basis. Now, again, if that is lost, Then we'll come to the candle at 72.10. We'll come to a candle here at 71.23, and then we come to the bottom here at 70.50. So this was still a nice double bottom here. As I pointed out, you had 70.50, and we come to this candle at 70.47. Okay, so that was your double bottom in play, and then it went right on up. So that's the same as what we had over here. So okay, so what you had is you had 70.13 on this candle. You had 70.06. See that, a double bottom, and then we had a nice rally on up. So always look for those kind of patterns. Now again, if this 70.06 is lost, then we'll come right to the bottom of this candle at 69.28, which is your price channel. If that is lost, we follow these candles, but bottom line, your target's going to be this 67.71, which is basically on your weekly chart. Okay, so that will be your a target if we start losing all these candles here. Okay, so but we don't worry about that right now. I just like to give you the projection just in case, wow, this is selling off. Where is it going to go? Well, you're going to go here, you're going to go here, you're going to go here, and then we can possibly go there. On the upside, again, watch that key 50-day. That is very, very crucial. Then we just follow these candles up nice until you get a retest of 76.18. Once you get above that and you can close above this price channel, then it's going to be very, very easy to hit that 77.34 and that 77.74. So just remember here, when you get seasonality going into summer driving, Memorial Day and 4th of July, and then you have hurricane season all the way to September, oil is not going to stay here. So this is when they talk about, the Fed doesn't see any inflation and inflation's coming down and all this. That's all nonsense, okay? Because basically you're in the shoulder season now for crude oil, for gasoline, for natural gas, okay, for hotels, for traveling, okay? This is all, okay, and all your flights and all that. See, this is your shoulder season, and also is hiring. You get a lot of temporary hiring going on here in the summer. So all that does is create inflation. So when they're talking about the Fed's gonna, cut 6 times, that's complete bullshit, okay? They're never gonna cut 6 times here. You'll be lucky to cut maybe once or twice, if at all. Okay, because inflation is going to start rocketing in here as soon as the world gets going here come spring. Okay, so just remember that. But anyway, today, watch these key levels. This is what you want to look for at today, that 8-day and this 21-day and that 8-day on your weekly or daily chart. On the upside, this key 50 SMA. If you can close above, then we have a good shot at maybe even hitting this price target at 76.18. Now your RSI looking good, 51. That can go up or down here, but that can rally. Now your MACD, your green is still above your red. That's looking really good. Now this is the MACD I've been watching here because this is like it's flattening right on out. But you can see how this red here, see how those are moving right on up here. So it's going to be a matter of time before that green's going to go over that red, and then you're going to have a nice rally here, maybe even to that 50-day or 200 SMA. All right, let's take a look here and see what old natty gas is doing. All right, natural gas, we have your daily chart. Now, look at this nice waterfall all the way on down. Okay, how did it get there? Well, when you look at this candle here, I pointed this out. You had 3.39. This candle here, this is the gap. Always watch these gaps. Okay, so that right there, that was your double top, and then she just basically sold off. But what was a really good tell on this here, a lot of times when you have that, it can come on down and then break right through and then go higher. But what the good tell on this was you had 3.39, and then we hit this candle here on a Friday at 3.37. I sold right into it. That is your double top with a lower high. That always tells you that this is going to go short. So then I've been just scalping that KOLD all the way down. Now over here, we had a nice indecision candle. So this was a good opportunity to scalp the UNG for a nice little pop here off your 21-day. But when you look at this candle and you look at this candle, this is like a tweezer top. It's not a pure tweezer top like what this is. But to see how when you get those real skinny candles, all sticky up there, what happens is she comes right on down. And that's what we had here. And then she just fallen out. And then when you get this series of lower lows, that's never good. Now, this candle held this 200-day, which it could have bounced right on up. But when you look at this candle, you can see where you didn't even get up to your SMAs here, and you didn't even get halfway through, and it just fell right on down. Now, what do we have here today? We have a big old gap, okay, all the way on down. But again, it looks like a bottoming tail here, so you have to be very careful. So what you want to do is look at the bottom of this candle. This is sitting at 2.31. If that is lost, then we'll come over to the candle here at 2.27, and then your big retest here at 2.235. Okay, that will be your retest if you can't hold it. Now on the upside, what you really want to watch here is 2.398. That's going to be very crucial. That's your gap. And then we look to the bottom of this candle here at 2.51. That's your fill. So if this rallies up here, usually these gaps and fills are like like a mag to a refrigerator. Okay, they just want to go and fill that up. So this is going to be very crucial. Now there's resistance in between that, so you want to watch this 2.39. That is crucial, and then we can just follow these candles. So you have 2.41, and then we come to the bottom of this 2.48, and then we'll come down to this candle here at 2.51. So there, just look to the left of the chart here, and you can see where you'll have all your resistance levels, on these candles. But bottom line, the gap at 2.39 and that fill at 2.51, that is going to be crucial. Now, again, if you can get above all that, then we can start coming to this candle. This candle right here is 2.56. Then we have 2.576 here and 2.58. And then you have your big 200 SMA sitting at 2.66. But when you look at this, see this 8-day, how this rolled over, just like it rolled over here, and then what happened. All right, so your 50-day, that's pointing on down. Your 21-day is rolling over. This is not looking pretty here at all, okay, as far as, ripping up higher. But again, there's still going to be a lot of good scalps on the long side. So never have an opinion, okay, never have an opinion. Now, right now, this is basically kind of late in the game here to say, oh, I'm going to start taking a short position. Your short position was up here, or do like what I do. I just come in and then just scalp it both ways all the way on down. I don't really like holding natural gas overnight because it is so volatile. I mean, they don't call this the widowmaker here for nothing. Okay, so I don't think my wife would appreciate, being a widow here. So anyway, you just want to, I just scalp it both ways throughout the day. So it works out pretty good. So again, basically just watch the bottom of this candle here. That's crucial, 2.31. The bottom here, 2.27, and then your big retest sitting at 2.235. Upside, watch the top of that candle at 2.39, and then the bottom, that gap fill, 2.51. If it can rally up, then we just take these candles, 2.56, 2.57, 2.58 up here, and then your retest at 2.66. So it's going to be very hard because your price now is below all these key SMAs here. Okay, so when you look here at your RSI, well, there was no divergence at all on this. This was just basically a double top in play, and now you're working yourself all the way down. This here is very, very bearish. When you see your green that just crossed over that red there, that's very, very bearish sign. You can see the example will be right here. See how when that crossed over, what happened? All the way on down. See when it crossed over here, all the way down here, and then all the way down. I'm not saying it can't reverse back up, because it can, but we got to see, you're going to need some kind of a catalyst here to raise this right on up here. Now, when you check the weather forecast, it's supposed to start getting a lot warmer here now. We had a really good cold spell there for about a week and a half, but now it's in the ski resorts here. We're just loving it because they not only the snow, but they could also make snow. So that worked out really good for them. But for trading natural gas here, just, keep it very, very tight on the upside and downside. So you can still scalp the short, but this is not where you're going to say, I'm going to go full-blown position in here on short. The short was up here. That's what we have to look at. Now, again, once this rallies on up, and eventually your natural gas isn't going to stay right down here for that long because you got summer coming up. And what people don't realize is summer, especially if you have a real hot summer, all the power plants, most of that stuff is all on natural gas here now. So that's where you really have your biggest consumption. People think it's the winter. It really isn't. It's more like in the summer. So once we do get a rally up here and you can get above all these SMAs, then we look for that 3.39 right there. And then this gap at 3.40. And then we look at that gap fill, which is 3.45. Above that, we just followed up 3.52, 57, 3.60, 3.63, and then your big retest up there at 3.64. Okay, let's take a quick look here on an hourly and a 4-hour. All right, hourly and a 4. Now I can see just here on a 4-hour chart, just the beautiful double top with a lower high, and she came right on down. Now your price is below your 8, not good. Below your 21, not good. Your 50, not good. Your 100-day and your 200-day, not good. So there's your gap going on, like I pointed out there on the daily. And then your key upside here is going to be trying to get back above that 8 SMA. Now, when we look at here at an hourly chart, well, you can see where it's fallen down here, but we got to see if this can hold the situation here at that 2.31. If you can, well, then you have a good shot at rallying on up, and this will reverse. Now, what I want to show you here is when you look at this price channel, okay, at 2.31, then we have, they say, well, how did it get there? Well, what we do is just follow this candle right here. Okay, what do you have? Okay, what do we have here? 2.29. Okay, so right there is your double bottom situation if it holds. If it doesn't, then you're going to come right down to this retest here at 2.23. So always look to the left of the chart. This is going to be always your first take. Is going to be that 2.29, and so far it's holding at 2.31 with a higher low. And if I say if that can hold, then you have a good chance of rallying up. If it can't, then you're going to come down and test this 2.235. All right, that's what I got for you right now on Yo Crude Ski and Natty Gas. I'll be back later today after the pick close at 2:30, and thanks for watching.